Hong Kong has a favorable tax regime, meaning, first of all, it is a territorial-based taxation system. Only Hong Kong-sourced income will be taxed in Hong Kong. Relative, for a lot of Canadians, they would know as a Canadian resident, you're basically subject to worldwide taxation. Second of all, Hong Kong does not tax capital gains. So it's, again, a favorable option for many, particularly when they're disposing of assets and investments in the future that's of capital nature. Third, it's the withholding tax. Repatriation is a key to many overseas companies coming into the region. Again, you want to be able to bring profits back home. Without withholding tax, it does make a huge difference because it greatly reduces your tax cost. Fourth, Hong Kong, other than the Canada-Hong Kong double taxation agreement, also has an agreement with China. The agreement it has with China, it's probably one of the best double tax agreements that China has with any other jurisdictions. And hence, the combination of Canada using Hong Kong to invest in China becomes a very desirable operating model. Plus, the tax rate in the region itself, Hong Kong, it's one of the lowest. We're looking at 16.5% right now, whereas obviously another jurisdiction that people would look at is Singapore. We're still looking at 17%. I think using Hong Kong, it's not news to many Canadian companies who are interested in coming into the region. Hong Kong becomes a desirable location for many reasons. On top of all the good tax reasons, there's also the non-tax reasons, including free foreign exchange control, the ease of setting up in Hong Kong, the amount of talent, the resources that you can recruit in Hong Kong. It's easy to set up a company in Hong Kong. Easier, I would say, when you compare it with places like China that could take 6 to 12 months, depending on the type of industry you're in. So Hong Kong itself, domestically, presents a very good picture and a very desirable location, and it's a great choice to many. The second advantage it has is the Canada-Hong Kong double taxation agreement that was signed a few years back, and that agreement actually triggered a lot of interest from Canadian companies that we dealt with coming into the region using Hong Kong, I would say, as a springboard into the rest of the region. China itself does have a withholding tax. With the Canada-China double taxation agreement or tax treaty, the withholding tax rate is 10%. Using Hong Kong as a platform to invest into China, the advantage is China into Hong Kong, there is a withholding tax, but Hong Kong out back to Canada, it does not have a withholding tax. Technically speaking, when Canada invests in Hong Kong, you don't have limits in terms of your equity and debt ratios. In a lot of countries, they do have rules that will restrict interest deductions. Again, from a tax perspective, it's important, particularly when you're making a lot of money. You want to make sure that you're matching the deductions. Hong Kong itself, other than China, is actually expanding its treaty network as well. Some people do have concerns a couple years back because the number of taxation agreements were limited compared with, for example, Singapore. As of March 2016, there are 34 tax treaties or double taxation agreements in place, Hong Kong and other parties. They're continuing negotiating with other jurisdictions and countries, meaning that they're expanding the network. The greater the network, meaning that overall your investment chain, the withholding tax would be lower. Another interesting proposal that came up was in this year's budget, Hong Kong has already committed to building itself as a regional hub for corporate treasury centers. Again, a very interesting development because traditionally, Hong Kong has some restrictions related to interest deductions. Now, they are basically being more competitive in terms of their tax system. Hence why we would always recommend Canadian companies to take a look and see what your business plan is. If you do plan to expand into China, for example, or a couple of locations in the region, you do want to set up a holding company for tax reasons, for business reasons, and Hong Kong, it's a very good option.